In this video, I will explain how to account for the disposal of plant assets through either a sale or retirement. Companies dispose of plant assets that are no longer useful to them in three ways: through a sale, retirement, or exchange. The accounting for the disposal of a plant asset through a sale or retirement is as follows. First, you must record depreciation up to the date of disposal. If the disposal does not occur on the first day of the year, the company must record the depreciation expense for the fraction of the year that the asset was used. You then need to remove the book value of the asset by debiting accumulated depreciation and crediting the asset account for cost. You will also need to record any cash proceeds and recognize any gains or losses when the book value does not equal the cash proceeds. The company must determine the book value of the plant asset at the time of disposal in order to determine the gain or loss. The book value is the difference between the cost of the plant asset and the accumulated depreciation to date. In a disposal by sale, the company compares the book value of the asset with the proceeds received from the sale. If the proceeds from the sale exceed the book value of the plant asset, a gain on disposal occurs. If, however, the proceeds from the sale are less than the book value, a loss on disposal occurs. To illustrate a gain on the sale of a plant asset, let's assume that on July 1st, Wright Company sells office furniture for $16,000 in cash. The office furniture originally cost $60,000 and as of January 1st had accumulated depreciation of $41,000. Depreciation for the first 6 months of 2017 is $8,000. First, we need to prepare the journal entry to record the depreciation expense up to the date of sale, which is July 1st. Wright records depreciation expense and updates accumulated depreciation by debiting depreciation expense and crediting accumulated depreciation for $8,000. This will record depreciation expense for the first 6 months of 2017. After the accumulated depreciation balance is updated, the company computes the gain or loss as the difference between the proceeds from the sale and the book value at the date of disposal. Wright Company has a gain on disposal of $5,000 because the proceeds of $16,000 exceed the book value of $11,000. The journal entry would be a debit to cash for $16,000. We also need to debit accumulated depreciation for $49,000. We're going to credit the equipment for $60,000. And in order for this journal entry to balance, we need to credit gain on disposal of plant assets for $5,000. Let's assume that instead of selling the office furniture for $16,000, Wright sells it for $9,000. In this instance, Wright has a loss of $2,000 because the proceeds of $9,000 are less than the book value of $11,000. In order to record this journal entry, we would debit cash for the proceeds, in this instance, $9,000. We would debit accumulated depreciation for $49,000. We would actually credit the equipment for $60,000. And in this instance, we actually need a debit, which is loss on disposal of plant assets, in the amount of $2,000 to make this journal entry balance. Companies simply retire rather than sell some assets at the end of their useful lives because these assets have a very specific use. In such a case, the asset is simply retired and no cash is received. In fact, you might need to pay money, like a disposal fee, to have the asset taken away. You need to decrease or debit the accumulated depreciation for the full amount of depreciation taken over the life of the asset, and decrease or credit the asset account for the original cost of the asset. The loss, a gain is not possible on a retirement, is equal to the asset's book value on the date of retirement. The solutions to this exercise will be provided in another video or document.